Welcome to the 40 Finance channel. It's time for a stock portfolio update. And spoiler alert, this is a very sad story. So if you enjoy watching videos of car accidents or other stories of despair, then this is the portfolio update for you. Okay, now this is the home screen of my Ally account. We're actually going to switch over to SeekingAlpha because I just don't like the way that this displays and you can't sort by anything, but just to give you sort of a proof of work, if you will, here's the account today, and you'll see that by Ally standards, I'm down about $30,000 and another $1,500 or so today as we speak. Now, this is the SeekingAlpha view, which we'll see here in a second is not only easier to sort through, but it's also more informative in terms of all these things that we can look up on my portfolio. And if you haven't signed up for SeekingAlpha yet, please look down in the description. I have an affiliate link with a significant discount on a 1-year subscription for you to their premium service. It allows you to sync your portfolio just like I do here. And if you're curious, since I use Ally Invest, it was very easy to sync. And at least for my personal account, it syncs every day sometime in the evening after the day's trading is over. So every day you wake up, the holdings are set. If you ran over and did a bunch of trades, though, it's not like a real-time type thing. It's sort of a once-a-day thing that they import the data and put it over in here. So for me right now, I'm sorting by value, right? So what are the top valuations in my account right now? And you see, at least today, right at the top, this is how I've been building out my QQQ position that I talk about all the time. Up to 40 shares, cost of $370, so plenty of opportunity for me to still get in and lower my cost basis. So far, I've lost 10% on that QQQ investment that I've been doing since, I don't know if it was late last year, it was definitely January of this year, but that's how much progress I've made. And it's basically been the biggest thing that I've been buying. Number 2, we've got Visa. And with Visa, I'm actually up 4%, value of $13,000. But, you know, you see this 4% up, it doesn't take you long to look down these columns and see where the rest of the losers are in comparison, starting first and foremost with PayPal. Cost basis is down to $168. I have lost 41% on my PayPal investment. Currently sits at $12,337. Obviously, if you sorted this by purchase price, which I'm not sure I can do. But PayPal far and away is the stock I've spent the most money on. So whenever your high conviction trade goes down in a stunning manner, it certainly hurts. Zillow, been adding a lot of Zillow lately. Currently at 48.61, I'm at 67.23, 200 shares, and I have lost 27% on Zillow. TJX, you know, it's funny because that's a long term investment that I've had since probably 2018 and haven't touched it. And lo and behold, it's my biggest winner, right? The thing that I haven't even touched, and this is TJ Maxx, if you know that store. It's worth $6,500, and I've got 105 shares. Probably will try to get some more money out of that with call options here in the near future when the market starts going back up. Magnite, I'm super big on Magnite right now, and I remain that way. 400 shares at $20. I paid, in hindsight, way too much for this one, but I am excited for their future. I have lost 40% on that. Rocket's a dud, $11.45. I've paid $18.24. I think I rounded up from somewhere in like, maybe I had 320 shares, and I recently rounded up and just bought 80 because it was down so far. So now I'm at 18 minus 37% on Rocket. TQQQ, so I've done a lot of videos on TQQQ. I'm now at an even 100 shares. 48.28 is my cost basis. Stock today is at 45.30. I've lost 6%. And I'll continue to buy TQQQ in the future, particularly if I have to average down. Let's see here. Square trading at 108. I have 40 shares. Haven't bought any Square. 217. I'm down 50%. Is that my biggest loser? Yeah, Square's my biggest loser, but not far behind is DraftKings. 1735, 230 shares, cost basis of 33.11. Man, this stock was $80 maybe 12 months ago or something. It's crazy. This is another one. You see I have an oddball share count. Not that that matters. This kept running down. I just buy another 70, give myself 300 shares to play with on call options if I chose to. That is worth about $4,000. Palantir. 300 shares of Palantir I've added to this position as well. $20.11 is my cost, down 41% on Palantir. And then Sabre, which is a obscure travel stock. I've got 200 shares at $11. This one was actually going positive recently until the oil and war crisis brought travel concerns down even more. So that one's down 14%. So if we sort it, biggest winner was TJX, Visa, at least of right now. And our biggest losers are Square, DraftKings, PayPal, Palantir, and Magnite. All right, now before we get into some of my feedback on my portfolio, I just want to point out, I kind of keep track of my portfolio gains in a more organic way, I guess you could say. I showed you the Ally screen, and they said I'm about like 30K down or something, but they miss a lot of calculations in with that. Small change in the grand scheme of things, but here's how 2022 really shook out. So here's the end of 2021. Last year I lost 13%. So we land this year at 102,247. My deposits were $4,700. I've gotten $51 in dividends, and I had a realized gain loss of $931 because I sold my Amazon shares and I sold my Taiwan Semiconductor shares. And the Amazon shares I sold for basically flat. I got like $70 or something back on them. And then the Taiwan Semi, I basically had, about $900 or so on the gain from selling that one. So this number basically represents, the full additions and deposits, right? So here's your starting point, and then I officially booked this win. So I put in this money, I booked this win. This rebates here is just Ally borrowing shares. That gives you a subtotal of about 108. Now, as I showed you, or right before I booked this video, the account balance, so what the portfolio was worth right before pressing record, was just shy of $82,000. So the difference between this, which is all the money I've put in, the real money, and this, which is what my assets are worth, is a net gain or net loss of minus $26,000. That's minus 24% just here in 2022 alone. All right, so down 24%, mega sad face, but what are you gonna do, right? We've been talking about this for a while. I switched back over here to SeekingAlpha. And the thing is, in this position, where if you just go down this 52-week range, right, on my portfolio across the board, you pretty much have everything near the 52-week lows. So does that make a whole lot of sense to sell out of any of these positions? I mean, honestly, you could make the argument that they have further to fall, and honestly, it wouldn't surprise me to a certain degree. I've said before, if you look at the Qs, I said $320 is about minus 20% from its high of 405. So that wouldn't surprise me if we got just a hair further down on the list. But this is no time to sell. This may not be the time to buy for some people, but in my opinion, it's given me the opportunity to lower some cost basis down here and potentially rebound with the rest of the stock market in the second half of the year. All right, so let's get some other opinions on my portfolio, thanks to Seeking Alpha here. And we'll start with the Seeking Alpha author score, which is really just people like you and me, financial advisors, etc., who write bullish, bearish articles on stocks. And right off the bat on the top, from this metric anyway, Magnite, Palantir, PayPal, QQQ, Zillow, Square, Visa. So some of my biggest pain points, oddly with Seeking Alpha authors, are my biggest opportunities. We go to Wall Street analysts. Magnite, Visa, TJ Maxx, PayPal, Square, DraftKings, Zillow. So again, the things that are dragging me down have the potential to get me out of the water sooner rather than later. Now on a quant score, which is Seeking Alpha sort of algorithm, quant score takes into account momentum as well, right? And which way is the stock trending? And obviously, there's a lot of stocks trending in the wrong direction right now. But from a quant score perspective, we've got the Qs up at number 1, Visa, TJ Maxx, Zillow, Sabre is in there, and then the rest start to get into negative territory with DraftKings, Magnite, PayPal, Palantir dead on the bottom. So a lot of different opinions down here. If you want to say, let's include Square here. Square, Palantir, PayPal, Magnite, DraftKings, you got algorithms saying stay away, right? Valuation grades not looking so hot. You got Wall Street mostly interested, and Seeking Alpha authors mostly interested in these names. So while it looks like a dead duck right now, there's a half of my portfolio that I would say has a better than not chance of certainly bouncing up from where it sits today. Does it get all the way back to par? That's hard to predict, but I feel good that it will make a rebound. All right, let's go look at the growth column really quick for my names. How does their forward revenue look for this year? Are these companies going out of business, or are they making gains? And DraftKings leading the list, 62% projected revenue going forward, our growth rate, that is. You got Magnite at 42, Square at 35, Palantir at 33, Sabre's up, TJX is up. Everything's up except for Zillow, which is a sort of an accounting thing, right? Because they're not, they won't be selling a ton of their iBuying houses anymore. So Zillow's revenue where it matters is going up. It actually, and you can go see my video on Zillow that I did. Their revenue top line, though, will take a haircut because they sold a lot of those houses last year and they're not in that business anymore. Now, Rocket, minus 16%. We'll see how interest rates go, but that's the projection for this year. To be honest with you, Rocket could be in for another year or two of stagnation before it makes another move to the upside. Either way, I like it, and they just issued ex-dividend date of March 7th for $1 a share. I have 300 shares, so I'll take the money. All right, how about EPS growth? So, when your EPS grows, then, of course, that's your bottom line, and it lowers your PE ratio. TJX, 141% EPS growth, projected. Let's be fair, that's projected. It's not written in stone. Magnite, 82%, Square, 37%, Visa, almost 20%, PayPal, 14%, Palantir, 12%, Rocket says minus 30%. That's probably the projection, but I wouldn't anticipate that because what will happen with Rocket is if the loan market starts to dry up like it's projected to, they'll probably lay off a bunch of people. Is about what it comes down to. And then you've got a couple that just don't have EPS right now, certainly on the gap level, and that, of course, is DraftKings. Zillow, I think this is an oversight here. Zillow will have likely a positive EPS at the end of this year. Sabre will not. So that's the brutal, honest truth on my stock portfolio right now. I certainly have not been immune to the market weakness whatsoever. Down 24, 25% since January 1. I also have minus $26,000, $27,000 in paper losses right now. If I were to sell everything in my account and walk away, I would be minus $27,000 from where I started. Those paper losses will never become real losses because I'm holding in and I still believe in a strong stock market. Even, how about this? How about a stronger stock market heading into the second half of 2022? We're in that stretch where things, it's just hard to find a good headline. It's really hard to find a good headline. But if you watch the market on Wednesday, okay, Wednesday, March 9th, NASDAQ was up about 3%. Oil prices were coming down. People thought that there was going to be diplomacy with the Russian war. That, of course, turned out to not be true. And we're back down negative here today on Thursday. So keep an eye on these headlines because your fortunes can shift. If you're in the same boat as me, your fortunes can shift quickly with just a couple headlines. One would, of course, be diplomacy, or peace talks over between Russia and Ukraine. That would be a big one. You also have things like OPEC, gas supply. You have United States reserve oil supply that they could release to bring prices down. Those would be big things to consider. You got basically COVID in the rearview mirror, at least for the short term, warmer weather. And now we just need to see a little bit of supply chain inflation balancing, which it's hard to imagine it could get too much worse from where it sits today. And then I think if you're in a similar boat to me, you'll start to see your stocks make a turn for the positive. All right, guys, let me know how your portfolio is looking. Are you doing worse than me? Minus $26,000, minus 25% since January 1st. Can you beat it? Leave a comment below and let me know. Also, don't forget to check out that special offer for Seeking Alpha Premium in the description. As always, thanks for watching. Please give the video a thumbs up, subscribe, share with your friends. We'll see you on the next one.